Most people believe the biggest trade in crypto is obvious. They think it's Bitcoin. They think it's Ethereum. Some think it's Solana. And historically, that belief made sense. But history has a habit of repeating itself in uncomfortable ways, especially for those who assume the future must look like the past, because the most important asset in the next phase of crypto is rarely the loudest one. It's the one quietly being positioned, the one that's suppressed. Okay, so in this video, we're going to walk through why a specific digital asset, largely dismissed, often misunderstood, and consistently underestimated, may be structurally positioned to outperform Bitcoin, Ethereum, and Solana combined as we move into 2026. Not because of hype, not because of narratives on social media, not because of anything else besides capital flows, market structure, and institutional behavior. And by the end of this video, you may understand why most investors are not ready, not emotionally ready, not, mentally ready, and not structurally ready for what is coming next. There's a fundamental mistake that retail investors make in every market cycle. They assume price leads adoption. In reality, adoption leads price quietly. If you look back, through history, the biggest winners weren't, obvious at first. Railroads before the big industrial boom, oil pipelines before the automobile explosion, internet infrastructure before the big dot-com giant era. The investors won. They were not chasing the most exciting story. They were positioning around infrastructure. Cryptocurrency is literally no different here. It's the same exact game. When institutions move, they don't announce it on social media. They don't chase the green candles. They're not FOMOing into positions. They accumulate during boredom, doubt, and consolidation. And that is exactly where we are right now in, today's current market. Toward the back half of 2025, something unusual began to happen. While Bitcoin and Ethereum investment products were seeing capital leave out, another asset began, extracting and accumulating steady income flows even during price stagnations. It was getting lots and billions of dollars worth of volume. And this is critical right here because historically, inflows during flat or even declining price, signals conviction, not speculation. Okay, so it's the difference between momentum trading and strategic positioning. And when you examine aggregated fund flow data from crypto investment vehicles week after week, one asset consistently stood out as a net recipient of capital while others struggled. That divergence matters. It matters a lot because it tells us where capital is actually being prepared. It shows us where the smart money is actually moving, not where just attention currently sits. There's a reason ETF approvals matter so much. It's not about headlines, it's about access. When an asset becomes available through regulated investment vehicles in major jurisdictions, it effectively unlocks entire pools of capital that were previously restricted. Pension funds, endowments, asset managers, institutional allocators, and unlike retail investors, these players don't rotate quickly. They build positions ahead of the narrative, not after it. What makes this cycle unique is that some assets gained ETF exposure late, meaning their accumulation phase happened quietly without anyone knowing, without the explosive price action seen elsewhere. Historically, that sets the stage for a catch-up performance. Bitcoin has narrative dominance, Ethereum has developer dominance, Solana has a big speed dominance, but narratives change. Structure does not change. The asset we're discussing was built around liquidity, settlement, efficiency, and cross-border value transfer, and not speculation. Okay, so that matters more as markets mature over time, as regulation increases, as tokenization expands, as institutions demand certainty. In the same way that Visa and Swift didn't become valuable because they were exciting, but because they were essential. Crypto infrastructure assets tend to be recognized late, not early, and when recognition comes, repricing is often violent. One of the most overlooked tools in market analysis is relative performance, not prices versus dollars, but prices versus other assets. When you examine how this asset behaved against Bitcoin, Ethereum, and Solana over multi-year periods, and pattern emerges, periods of consolidation, followed by aggressive outperformance, followed by reaccumulation, this is not random. It's what accumulation driven markets look exactly like. And when relative strength begins to trend upwards against dominant assets, it signals rotation and not coincidence. Historically, these rotations precede broader recognition. Every market cycle has an asset, people refuse to believe in. It's like they just can't believe in that asset. In the early 2000s, it was Amazon. No one saw that coming. In the 2000s, it was Bitcoin. Literally, no one saw that coming. And in traditional finance, it was passive indexing. Disbelief doesn't stop performance, it actually fuels it. It does the complete opposite. Everyone's going one way, but the real play is somewhere else because disbelief keeps on positioning itself. It delays euphoria. It extends accumulation, more time to acquire more. Ironically, skepticism in crypto is often the final ingredient before explosive moves happen. And as this asset continues to be discussed in institutional contexts, not as just hype driven ones, resistance begins to soften, not all at once, but gradually. Market cycles don't just peak randomly. They peak when liquidity expands, when regulation stabilizes, when infrastructure becomes unavoidable. 2026 aligns with all three: tokenized assets, institutional settlement, cross-border efficiency, on-chain liquidity. And if history rhymes, 2026 won't be about narratives. It'll actually be about utility finally being priced in. And assets positioned for that environment don't just participate, they actually outperform. And at some point, disbelief turns into curiosity. Curiosity turns into allocation, and allocation turns into advocacy. And that's how skeptics actually become converts. And by the time the crowd is comfortable, the opportunity has already passed. This isn't about predicting the future, it's about actually sitting down and recognizing structure. And if this asset does what, infrastructure assets historically do, quietly absorb capital before repricing, then outperforming Bitcoin, Ethereum, and Solana in 2026 won't seem controversial in hindsight. It'll actually seem obvious at that point. And as always, guys, this is not financial advice. Crypto markets are super volatile, emotional, and very unforgiving. But, history favors those who understand where the smart money moves before everyone else does. If you guys know, I'm speaking on XRP. I truly believe that XRP is going to outperform Bitcoin, Ethereum, Solana in 2026. So guys, make sure to smash that subscribe button, and I'll see you guys in the next video.